Welcome back to Fast Market. I'm Tom White, joined again by Kevin Hincks, and we brought back Scott Bauer, CEO of Prosper Trading Academy, to join us for this last segment. Quick market check, Kev.
Trying to make a little comeback here.
Yeah.
E-mini's now only down 10.
So, NASDAQ leading to the downside, down 0.6%.
Yep.
But I think that's a FANG Plus names that are...
Pretty nice little comeback here in Russell that was almost down 1%. Now it's down about 9/16.
Citigroup up 3.6%.
Amazing. And now we're getting a little, all the other financials
the other ones are
up.
catching up a little bit here. Yep.
And that's perfect segue into our next segment here, guys. We're going to talk about JP Morgan, Wells Fargo. They both got earnings tomorrow before the bell. Like I said, Wells Fargo down about, I think, 25-30% last year. Didn't do well. You know what? They did a survey. They talked to some of the workers at Wells Fargo, and they said nothing's changed within the company as far as, that big scandal they had about the opening of accounts. That was a real worrisome note that I saw.
Meaning there's still things going on? Is that?
You hope not, but they're supposedly cleaned house. But let's look at, you want to look at Wells Fargo first, Kevin?
Either one, doesn't matter.
Let's look at Wells Fargo, guys. What are you guys looking at here as far as strategies go? Wells Fargo expecting about a $1.70 move, plus or minus earnings.
Here's the thing. Wells Fargo is one of those companies that what you just talked about, they need to stay off the headlines, right? This is a company that held in there. Remember, the original fine for all the problems that they had was $150 million. That's 3 cents a share.
Yeah, but they lost loyalty from customers. That was a big thing.
But as long as they can get that back and recover, this stock has sold off substantially.
I know. They have got the least exposure overseas out of the major banks also. So that's actually a bonus.
And they are a massive bank.
See, we just don't realize it because we're in the Midwest.
Right, exactly right.
It's all out west, and where JP Morgan and Citi are the big ones here, and out east. But think about this. Lending for Wells Fargo has really gotten hit lately. And that's because you're seeing some of the competitors really pick up lending, and that's Quicken Loans and some of the others that, they're eating their lunch, and they're making it simple, to get a Rocket mortgage and some other ways to get that home mortgage where you used to have to rely on. Wells Fargo was such a big player in that space. I mean, does that figure into
expect to move in Wells Fargo a little higher here, about 3%.
Implied volatility is not that high on a 52-week basis, but that's probably due to some of the sell-offs that we've seen this year.
All of these banks have these spikes in implied vol, which is it's almost like a false positive on some of these numbers. If you look, volatility still historically really high in Wells Fargo.
Yep. And that's what I love about that implied volatility lower that we have there, Scott.
You put it on the chart, really shows
it gives you a good idea. You're like, hey, it's only 42% implied volatility percentile rank over the last 52 weeks, but
it's only been above the mid-30s twice.
Barely.
So that's what you have to understand. That's why we tell everyone, throw that lower on your graph, on your chart.
All right, so what are you guys looking at as far as strategies go? The sector's been beat up. Citigroup rallying, 3.6% today? I mean, does that skew your outlook for this particular name, Scott?
No, it doesn't, because I think Wells is one of the outliers. And like Kevin said, it's more of a story, right? I don't know what their performance really is going to do in terms of stock price tomorrow. It has to stay out of the headlines. If anything, I probably lean this towards the bearish side of things, where JP, I'm very bullish.
Right.
But I'm very skeptical with Wells, so I would look to see, volatility is not real high here, so collecting premium is probably not going to be a great thing here.
Yeah, I mean, that's the hard thing with a lot of these banks. Yeah, they're expecting about a $1.72 plus or minus move, Kevin, but there's just not a lot of premium to do any of the specific strategies that we tend to gravitate towards going into earnings.
Yeah, like I said, the action on not only Citigroup today makes me think that the bottoms are in on all these financials, right? And so you got to look at something with some upside exposure, maybe even long term. Maybe not just a one-day trade or a four-day trade. Maybe something in like the diagonal or stock replacement strategy, something with a little more upside.
Like that thought process, though. Increase your duration.
Yep.
If you have an assumption in the stock that maybe it's going to grind back up above 50 over the next month or two, that's a way to look at it. That's if you're not getting a lot of quality premiums in these options, right, Scott?
Absolutely. The other thing also is I think this is a lesson here. If you're undecided, you pass on it.
Yeah.
Right.
There's
Trade it after the news, right?
There's always going to be another trade to make. Don't try and force something just to to get in the action like you have to be part of a trade here. If there's nothing that you really like from either a bias standpoint or even a theoretical standpoint, you move on.
Yeah, and Kevin brought up here on the platform a
stock replacement strategy, 45.50. You pay $360 for it.
Buying the March, selling the Jan.
Right. It's a bullish play in Wells Fargo that's not very expensive. It gives you a little upside. It gives you a chance to roll. There's still 60-some days left in the March, so it gives you, like I said, if you want to do something short term, the premiums are a little low.
Yeah.
But this gives you a little upside play if you're seeing that all these financials have bottomed. I mean, if you look at the chart on Wells Fargo, obviously it got down to 43, but that was in the meltdown that happened. So once you look about right here in the recovery, you're not too far. 45 strike isn't probably going to hurt you.
Okay, so go ahead and put that in. Kevin analyzed that trade so you can get a good idea of what he was looking at on that. But now let's move over to another one, J.P. Morgan Chase. That trades a little bit more as far as option volume goes. It seems to be the cream of the crop as far as the banking sector goes. It didn't fall as much as the other names did last year. So it had a pretty decent year. I think part of that equates to Jamie Dimon's a pretty good leader.
Yep.
He lays it out there. IV percentile ranks pretty low
41,
in there
but
also.
again, you have to
Same pattern.
Look at that. It's if you look right there, it's lower than the tops of implied vol, but the stock has come back $10. It should be off the lows.
Yep, and it's back over $100 a share for this particular name. Now, is there a specific strategy, Scott, that you like to look at in this particular name going into earnings?
Yes,
Okay.
and it's upside, but it's also taking advantage of the fact that IV is not real expensive.
Yeah.
So I'm looking to do an upside call calendar, and I may even skew it to a diagonal.
That's where you're
I
buying
sell,
something long-term, selling something near-term.
Exactly, where I sell perhaps let's see, the market maker move is what, about $2.50, right?
$2.50,
$2.50, 3%. So I may look to sell the 103 or 104 this week, even though there's not a lot of premium in that, but go out a few weeks, maybe even to regular Feb.
The monthly series,
The monthly, and buy a lower strike. Buy the 101 maybe,
We only got $5 strikes, so you got to buy the 100.
We go to the Feb 8th.
Yeah, he can go up one more.
Yep.
Go up 1 week.
Where we should have
dollar
those
strikes
dollar
in
wide
those,
strikes. And there we go.
101?
And I'm looking to buy the 101.
Okay.
So I'm going to take advantage of the volatility discrepancy. I'm also going to skew this. So it's a combination of a calendar, combination of a vertical, pure upside play here.
Yep.
Right.
And Scott, this is a little bit different than the stock replacement where we buy a deep in the money 70 delta call in the farther series. Shorter term, it's still a diagonal. But
About a 21 delta spread.
Yeah, but you tighten up the strikes here as far as the diagonal goes.
Yeah, tighten up the strikes, tighten up my overall cost, and you know what? I like the upside. Again, I'm sticking with the mantra here that Goldman, JP, that we are going to see some pretty darn good trading revenues, and hopefully that boosts the stock.
And that's an example trade on how to play an assumption that you might have on these particular names. But I think the key thing here is staying risk defined, taking advantage of that implied volatility that's higher in that near-term option, and then also, you're collecting some time decay on that particular trade too. But definitely
all
bullish.
strategies risk defined.
All bullish, and you know what? That move in Citigroup, I think it skewed a lot of people's assumptions.
It's like tone change, right?
I know, because expectations were so low
Right.
in this particular space.
Right, look what 45 minutes did this morning.
Exactly.
After the opening of the market.
Yeah. All right, guys. So Kevin went ahead and put that in. So that wraps up our show today. I'd like to thank Scott Bauer, CEO of Prosper Trading Academy, for joining us today. Always good input. And Kevin Hincks, as always, co-host of Fast Market. That does it for us today. Tune in tomorrow, 10 a.m. Central Time, right here on the TD Ameritrade Network. We've got a lot of earnings on tap and a lot of stuff to cover. Have a great day, everybody.